Good evening, Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Wednesday, and we're February 8th, 2023. I'll tell you the one thing that you got to watch tonight, Disney in the aftermarket up sharply, as Disney had a beat on both earnings and revenue growth, but it had a miss in new subscribers. Then it's cutting 7,000 people from its payrolls, and it's splitting the company into 3 separate divisions. So there's a lot going on. The market likes what it saw, and away you go. Now, I've already written my evening report for the people that buy my full subscriptions. And I go into what FactSet is talking about with over 50% of the companies reporting earnings, where they're at right now in terms of misses and gains. How many are talking about currency headwinds, what they mean for them if they do business abroad, what it means here. So I go into that in detail. As for the market, I want to point something out real clear. There's a huge battle on right now between whether or not traders believe the Fed or not. This has been going on for 6-7 months. Starting in the summer, we saw that the tape readers said, no, the Fed is not going to keep going with those interest rates. And now with this big jobs data report and hearing all the Fed members coming out, there are some large bets being placed, and you can see them on the CME Fed Watch page. And when you watch that, you see that there are some bets coming in that we might go to 6%. Not stopping at 5.1. Now, the beauty is in March, we get to see the dot plot come out again, and that'll give us a good idea as to what the Fed members are thinking. But so far, over the past 48 hours, we've seen about 6 different members speak, and to a person, they are uncomfortable with how strong labor is. They see the Fed having to go up higher. Where that is, some still saying 5.1% will do it. But to a person, none are saying that interest rates, when they get to where they have to go, are going to revert back down this year. The market is saying that, not these Fed members. That's a battle. When we take a look at the S&P, you can see that I told you, I thought we were going to go into a consolidation phase, which is right where you're at now. You can come out either way of this, to the upside or the downside. For the moment, you still have the pattern starting back here and here. You can see all this. Higher lows, higher highs. That's bullish. The market is over the 18-day average, but it cannot afford to go back and test it without violating the pattern of higher lows, higher highs. Should it want to make a run for the 18-day average, you'd have to get through 407.57. So you might say, and you should say to me, Ira, what's the average move that we're getting each day on that moving average? We can look at it. 403.70, 402.90. Day before, 401.84, about 90 cents. So to get to 403.70, round figures, you have to get through 407.50. That would break the bullish pattern of the market and put the market into a potential stall. Where's the market been having problems? The same place it's been all the way through it. Every time it's making a run at the 18-day average and hitting it, it gets thrown back in about 48 hours to well under it. Now, you're looking right here at a market flirting with losing its embedded reading. It closed near the lows of the day in the very bottom part of the day's range with a 79.52 reading. Unless you get a big up move tomorrow, the odds strongly favor you're going to lose the embedded reading and make a run to wherever that 18-day average is, unless it loses it and immediately regains it. That can always happen. Am I betting on that? No. When we go to UGA, the gasoline, I got the bounce I wanted according to my energy report. Now, let me remind you of something before we go any further. I didn't write it anymore. Now I record them. I did a special video energy report for you on gasoline. The reason, you know it. You're going to start hearing about Two Buddy and AAA, and they're going to tell you where the cheapest gas stations are in your neighborhood as we get into spring. Now, the good news is gasoline had fallen about 50 cents a gallon recently. So it's coming from a low level. We'll go back to that chart and you'll be able to actually match up with that and see what I'm talking about. What are the seasonals? When do they typically kick in? That's first thing. Second thing let's talk about. What about the weekly charts, the daily charts, the different futures months? I put it all together in a special report that goes off our website tomorrow. So if you haven't seen it, I tell you, if you want to go see it, now is the time. It'll be gone. We only keep our reports up for 4 business days. After that, I don't want them up. That's my decision, because they're not a history lesson. They're not about am I right or wrong. They're about giving you the setup right now based on what I see. And then if you're a subscriber, I keep up with it in my paid subscription area. How do you keep up? You can either move your cursor up here. You'll see an icon appear. Give it a click. It'll take you to that area. You can go to iraepstein.com and do that, or call one of my staff if you're having other issues. You shouldn't. A lot of people have come in and seen it. But this represents what gasoline prices have basically done, because this fund is based on gasoline futures. So you've come down, you're holding, as I predict often, you're holding the 100-day average and the Bollinger Band on the first test of them. Now the key is, can you get up and through these numbers, and where are you? Admittedly, it's only February 8th. February 8th is not where the seasonals begin, but it's where you probably are going to make a low in the market and then grind to it. Some traders will put on some out-of-the-money options, different strategies you can put on. It's up to you. Apple. I've been telling my traders that I think Apple's got a problem between right here, the 200-day average up to the upper Bollinger Band, purely because, generally speaking, the first time you hit a 200-day average, you can get through it, but you'll come back and test it over and over. And the reason is, if you think about it, it's a big number, okay? There's 52 weeks to a year for the weekly charts, and for the daily chart, 200 days is just about a whole year of trading. So it makes sense that if you got over it, which is bullish, that you come back and test it to see what you're made out of. AMC. So while the market liked the increase in pricing, it looks at the business model and says it's still a movie theater, and are they able to make money? You know, that's it. Now you want to charge people more money for those seats. Is that really going to bring them in or drive them out of the theater? You got to look at it all the which ways. I know so much about this, having owned the movie theater, and was not successful at it, by the way. Lower lows, higher highs. Market came back down to the 18-day average. It's a hard business. There's a reason those chains keep going bankrupt. Understand that. In XLF, if you take a look, the market, sideways action, embedded, which tells me that still in the financial services, traders are taking what? They're still trying to buy the market. Now, I've been telling my subscribers, who I have long this, by the way, to take some money off the table going into today and for the past 3 days. I can prove it. I've got all the tapes to prove what I say, okay? And I was lucky I got long on this rally, okay? So I get wrong too, folks. I get wrong on. I just told you about a movie theater investment, okay? Everything is not rosy. I've had good things. I've had bad things. That's how life goes. But if you don't get up to the bat and you don't take that and swing, that's it. Want to know what I learned in life? I got to share this with you. We all look at baseball. You do realize you get into the Hall of Fame as a batter if you strike out 2 out of 3 times. Think about that and apply it to life and keep swinging, because you can do it. All you got to do is get right and ride the right ones there and be consistent. That is what baseball, it's the story of life, at least in America. When you look at XLI, higher lows, higher highs, overbought. I want no part of that. When we step over to SOX. Now, SOX is interesting here. It's on the verge of, do you buy it or not? I hate that it closed near the day's lows, because what it probably means is after 9 in the morning Central Time, if this market doesn't pick up, it's going to lose the embedded reading. It might be to the point where it wants to correct again to the 405.75 area. When we take a look at XHB, the home builders, they've already lost the embedded reading. I think you've had your time to come out in longs. I think this market's going to 67, 67. It would have to re-embed to prove me wrong or get back over 72.98. I don't see that in either side happening before you get to that 18-day average of closes. On the energy sector, you've stepped out of the downtrend. Another thing I like about gasoline, you stepped out of the downtrend, you got into the 100-day average, the green number, and the Bollinger Band. It's often an area you'll try to find support or a lower average under it to 200. It didn't go for that, and it was already oversold when it got there. That does not mean I'm bullish. It means I'm no longer in the bear camp. Do you understand the difference? Very important with that. Gold is still in the bear camp. How do you come out of the bear camp? Well, you're oversold. Should this market get over 175.27, which was Tuesday's, not Wednesday, which is today, Tuesday's high, that would give you then higher lows, higher highs. You'd be out of the bear trend. You can't get bullish until you close back over 178.10. You could create a bear market rally at best. Who's in control of the market right now? The bears. They still have the lower highs, lower lows, but I hate oversold markets. In SLV, you had 3 days under the Bollinger Band. If you've taken the enhanced Bollinger Band course, I'm going to stop here. Go to the website, iraepstein.com, under education, and look at the course there. It's so simple. You will learn how to put these pieces together. But 3 days under the Bollinger Band, as my rule of thumb, 5% of the time you'll stay over or under a band. When you get successive moves under, I count each one and I take it away from that 5%. So on day one, I got 4% chance for the next day of staying under it. Days after, day after. So coming into today, and I explained this last night before this, I saw a 2% chance that you would stay underneath the Bollinger Band. Tell me what you did. You moved to the right. That's not a buy signal. It's a signal market is still very bearish. It moved to the right-hand side. If it wants to continue its trek to the down, it could. There's still been no signal to do anything. It's just short covering at the best. In the copper market, still bearish. We're waiting on news from China that they're going to do something. Now, as something part of this, I noticed today that Australia, their first load of coal, after since 2020 or so, is making its way to China. So the trade relations between the two countries, China has said they're not buying anything because Australia blamed them for the COVID, if you'll remember the Wuhan deal, and China didn't like it. So they said, we're not buying goods from you. We're going to put sanctions on our companies. They can't buy certain things. That came off, and the first coal load is going there. So that's good, not bad. As you can see how the market's working here, should you take out the 39.98, let's just see. Am I right? Yeah, 39.98. It would be the first sign that we've had in a while that the market just wants to get back to the 18-day average. Trading in this narrow of a band doesn't set you up for a bullish or bearish play as I see it. In TLT, what did I say yesterday? Before you got this little bounce today, I said yesterday to you, you got your move coming in. I think you're going to hit. This is Monday's action. I think you're going to hit the lower Bollinger Band. That number is 105.04. You hit 105, and now you're getting a bounce off the Bollinger Band. It's not a trend change because there is none. You're caught in the sideways action here. It's winding itself up. This is where traders get all confused in the market, typically lose money, in my opinion, because you rarely break out of that Bollinger Band 1, 2, 3, as we've talked about. Eventually, the sideways action leads to a breakout up or down, which means you will get over that Bollinger Band and push the market and push the band. I don't think you're there at this point. When we come to UUP, all right, so we look at the dollar. It's still strong as can be, but it's overbought. Markets rarely stay over the upper Bollinger Band, and you play it accordingly. And on FXE, you went down to the lower band. You're rarely going to stay under that. So we're looking. This market is so confused after all these central banks. Traders are trying to come to some type of trade conclusion. Are the banks right? Are the banks wrong? What are the banks saying? Some are saying they want to pause already. The U.S. isn't saying that just yet. European Central Bank isn't. Bank of Canada did. We saw the Polish Central Bank come out. They're holding their rate steady. There are other banks doing the same. I don't know where we're at. One other thing, used car prices today. I was reading the Bloomberg article. They took off again to the upside. That is happening because you got so many people working and they're willing to bid for things. This is the problem. You cannot create a slowdown in inflation all by itself if people keep getting all these jobs and the market wants them. Those 7,000 people from Disney, there are mid-sized companies dying to get their talent. I don't know what jobs they're firing. If they're from amusement parks, they'll go to Seven Flags. You know what I'm getting at. There's different things that are going to go on there. So again, please take a look. You want to go to the website, iraepstein.com. You can see the energy report and be certain to take that course on the enhanced Bollinger Bands. It's going to make you a two-gun pistol Pete. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow. Take care.